All right, so now we're finally here at the charts. I've got the visual up on the screen right now. So let's take a look at the information that I have in my business. And I'll kind of give a walkthrough and kind of give some commentary around here to help you interpret the results that you'll see on your financials. So here we go. Let's dive in. So right here, my screen is split with the FS Visual tool on the right and the reports on the left. They're all still condensed. I just took a moment to enter all this into the FS Visual tool. And I wanted to have this on the left-hand side for reference also. Okay, so the income statement. Okay, so where is your profit being squeezed? So first of all, let me just say, ideally you want to have a nice open profit funnel because as you can already start to see, there's a lot of stuff that happens after profit and you need profit to do that necessary and also really great stuff. So naturally, we want the profit funnel to be as open as possible. And here we can see at the different levels where your profit's being squeezed, resulting in a thin profit. So I can see pretty clearly that the biggest squeeze on mine is at the gross profit level, which is probably very common depending on industry. But if it's out of line, if the squeeze is too much, then one, that leaves you with not enough profit to do all the stuff you need to do later on. But two, and maybe more importantly, something actionable for you to do is you could see, okay, do I need to change something? You can only increase profit by one of two ways. You can increase margin or decrease expenses. So at the gross profit level, I'm looking at markup and margin. So what do I mean? First of all, what is gross profit? Gross profit is total revenue minus cost of goods sold, COGS, or direct costs. That's the stuff that you have to buy in order to do the jobs that's bringing in the money. The rest is indirect cost or overhead. But here at the gross profit level, we're looking at markup and margin. So you have a job, it's going to cost X dollars. You need to make sure you're marking up that price enough and consistently with every job so that your margin is opened up, so that your profit funnel is opened up enough to take care of all that really great stuff. So either you might need to increase your rates for the jobs that you're proposing to achieve that markup, or negotiate prices with your vendors to get a better deal, right? Increase margin, decrease expenses. So I can see pretty clearly that my squeeze is at the gross profit level, which is from my cost of goods sold being pretty high compared to my revenue. So the idea with this is I can identify that quickly. I'm now going to look back at my reports, so you can see those on the screen right here, and I need to open this up. So income is what it is, gross profit's here. What affected that change? It's in this section right here. So I can see this is the stuff that is causing the squeeze at my gross profit level. If I had a squeeze at the net operating income, well, then I need to look at the section above that. So here's the net operating income. I'm going to open this up. This is just called expenses. And so this is the stuff that's creating whatever squeeze there is at that level. And so on and so forth with the other. All right, so that's a brief overview on the income statement. Let's move on to the statement of cash flows. First of all, let me get that report pulled up here. Okay, so notice they're all still collapsed. That's fine, but we're looking right here in this middle section. I love this report. I love answering the question, where did my cash go? Where did it come from? Because profit's not cash. This is so helpful. Mine looks kind of crazy here because there was a loan. I bought a new truck and there was a loan on the books. So it looks like a crazy dip here and then a crazy increase here. So same idea as before. We're going to see those areas, right? That's a big orange box. That's a trouble spot. Where do I look on the report to find that? Let me just jump there just to show you that. So this is in the investing category. Okay, so major sections, there's operations, which happen to be these two first boxes, and then investing and then financing. So let's dive into each one and explore a little bit of what we find in those major sections on your statement of cash flows. Let's start with operations. So I'm going to use this. Again, we're going to use this to see some obvious stuff. and then jump back over to your reports to see what's going on. So on my statement of cash flows here, I'm looking in the operations section, which is this whole chunk up here, which does include net income. Okay, but what else? We have this line that says adjustments to reconcile net income to, what does that say? To net cash provided by, it says operating activities. So think of your core business operations. You want that to be not only profitable, but providing a good cash flow. In my case, I'm profitable, but in that section, I'm actually losing some cash because of the orange. I can see orange. I really want that to be green, both of them. I want net income to be profitable. I want to be profitable, not have a loss, and I want to have solid cash flow from operations. So for me, I'm thinking, okay, why is that orange? It should be green, and it should be pretty solidly green. So I'm going to look back on my report and see what's going on. Okay, so I'm looking for red numbers that are holding me back, right? That's a drain to my cash flow. Just real quick, the black numbers we see here, they're positive. That would be a positive impact to the value of my cash, whereas the red numbers, the negative, are a negative impact to the value of my cash. So that doesn't mean that cash actually came in or cash actually left. It just means it impacted to the value of my cash. I know I got to say it goofy like that. Every one of these lines here too are going to have its own interpretation. So there's a little bit of that, but we can see, okay, orange box there. Where are my negative numbers on my statement of cash flows? In my case, in my operations, I can see, oh my goodness, accounts receivable is really dragging me down. So I have customers that I invoiced, right? I incurred revenue in the period that we're looking at, but they have not paid me cash. Maybe they're paying me too slow. Maybe I gotta try to get payment in faster to help my cash flow. Because we know profit's not cash, and this is explaining a little bit of why I am dropping in cash in this area. I want that to be green. I want that to be positive. So that's what I'm looking for. Okay, what is coming out of my business? What are the red numbers, the negatives? What are the big negative numbers? And then I can see, okay, the black numbers are a positive impact to my cash. So that means it increased to my cash now. But let's think about the whole picture, right? The credit card needs to be paid off, so it's going to be paid out. So that just tells me I got to really talk to my customers to get more money coming in so I can take care of my bills, pay myself, plus pay off my debts. All right, so that's a little bit on the operations here. Let's go down to the next one, investing. So if I open up investing, I see a vehicle. Okay, so I purchased a vehicle. I invested in my company in the form of fixed assets. So you should get a return on that investment. Fixed assets, especially all your assets really, but let's think about fixed assets mostly. They should serve the business, and you for that matter, to drive revenue and profits. You should get a return on the investment now, sometime in the future, hopefully soon. But that's why it's called investing, because we're going to get a return on it in the future, so long it's utilized optimally. All right, so that's a big negative number. So I'm seeing the big orange box on the chart, and I'm looking back over here on my report and saying, yep, that's why. So again, that does not mean that $22,000 left my business. It's just on the accounting that impacted the value to my cash. We're going to see the flip side of it here. I happen to have a loan for this item. So we're going to see that be a big positive, which we can see on the screen there in the financing. And on that note, let's jump over there. Let's get rid of this and bring down financing. Okay, so yep, there we go. There is the note. There is the loan, which is a big positive number. So this has a positive impact to my cash. This is kind of offsetting the whole system. It says, no, you didn't really pay out $22,000 for that truck. No, that impacted your cash over there, but now the loan is impacting your cash over here. So it offsets and kind of takes care of itself that way. But what are we finding here? Okay, what is financing activities? Well, yes, loans are part of it. But really, ask the question, how are you financing the business? Or how is the business being financed? So in this case, we do have a loan involved, but also notice these 3000 series. Those happen to be equity accounts, and these are all owner related, or let's say shareholder related. I want you to think of yourself as a shareholder. You know, when you go to the stock market and buy stocks, you become a shareholder and you have an interest in that company. You want, when you invest in a company like that, you want to get a return. You want to get rewarded. I want you to think about the same way in your business, and I have a hunch you'll get a much better return on your investment than just the stock market. So keep it up, keep rock and rolling, and keep using tools like this to really get the most out of that amazing investment. All right, so back to this financing. How is the business being financed? Yes, loans, specifically long-term loans, right? But also shareholder-related activity. We can see contributions. I had to contribute my funds, my belief in my company to get it going. That's this positive number right here. And then over time, I've taken a paycheck, right? Members' distributions is coming out. That's cash leaving the business for my benefit. Profit distributions, if you have multiple members, you would see, multiple things going on here to the different members or owners or whatever it is. But that is another place where cash may be going that happens after profit. I love this report so much. It answers such good questions like that. Okay, let's wrap this up. So that's the statement of cash flows. Again, 3 major sections. You have operations, operating and investing and financing. And then finally, of course, there is the summary. So this year for this online course, this business started this year. So started with $0 and now we're ending up at $9,000. So that's a pretty good increase right there. That's a little summary on cash. All right, let's move on to the balance sheet. Now down here, let me get to the report. Okay, so here's my report and let's go down over here. All right, the balance sheet. Very good. This lists your assets and liabilities and equity. Okay, so assets are things you own, stores of value, things of value to the company. Liabilities are debt or things you owe. You got to pay those out later, of course. And then equity is what's left over. It's the difference between those two. If you think about it, it's really kind of like net worth. On the personal finance side, we have assets minus liabilities equals net worth. Well, the accounting equation is almost just like that. It happens to be assets equals liabilities plus equity. But if we move that liabilities from one side of the equal sign to the other side, it becomes assets minus liabilities equals equity. So equity equals net worth. In my mind, that's how I think about it. So I know I want equity to be positive and I want it to increase over time. So right here, it looks okay. I can watch this over time to see if it's going in the right direction or going in the wrong direction. And hopefully I can pull some levers to get it going in the right direction. All right, so what else to know about the balance sheet here? So of course, we want our assets to be big, our liabilities to be small, and our equity to be large. Here's a little teaser, little quick tip. Profit, net income, flows right into equity. So if you want your equity to increase, first thing to work on is being profitable. Okay, so assets here, you notice the shaded areas too. So I have light green and dark green and light orange and dark orange. That corresponds to current and long-term stuff. Both sides have current. There's current assets and current liabilities, and then there's more fixed or long-term stuff respectively as well. But the same deal, we're looking over here to see how we're doing, and if somehow our liabilities are increasing, they're towering over our assets, we want to go examine what's going on. So let's just go through and we'll open up current assets to see what's in here. Okay, so I have some bank accounts, I have some accounts receivable, that's the customer payments I gotta collect. Inventory, okay, and undeposited funds. Okay, all this looks pretty normal balances, and my picture is fine. But if it weren't, I want to make sure I'm understanding what's here and know how to increase my assets. Okay, fixed assets is just that vehicle. That's all there's on there. Again, that should really serve to drive revenue and profits for the business. Moving on down to liabilities, let's look at current liabilities. On my chart, it's smaller compared to my current assets, which is what I want. But if it wasn't, I'd really want to come over here to examine what's going on. So I can see my accounts payable. Those are bills from vendors I got to pay off. Same with the credit card. I got to pay off that balance. This here happens to be just an accounting tool. We're going to see the opposites of the negative on the long-term liabilities. It's just an accounting mechanism. Sales tax payable. I got to pay that out. Okay, so that's fine. And then if long-term liabilities were getting out of hand, I'd want to come in here to see what's happening in long-term liabilities. I just have that one loan to pay back. So that's what's happening back over here. Okay, let's drop down equity to see what's here. So like I said, here's net income. There's your profit. That's the accumulated profit for the year showing up on your balance sheet in the form of equity. So again, that being profitable. So going way back up to the profit funnel, opening that up helps your equity number, plus all the other stuff through the cash flow statement as well. So be profitable. Okay, so what else is in equity? We saw some of this stuff already in the statement of cash flows. Remember those contributions and the owner's pay, all this stuff. So this is the status or the balances of those particular shareholder related accounts. So assets are more than liabilities in this case, so I have a positive equity. And I'm going to do whatever I can to make that increase and increase. All right, so that's basically it. The whole thing about all this, we're using the report, we're using the visual tool to see the charts, to see things very easily. Okay, so I can go way back up here to see where my squeeze is on profit. And I'm going to jump back over here to my income statement to see what exactly is contributing to that squeeze, looking in the correct corresponding section. In this case, I have high supplies and materials. Then I want to see, where's my cash coming from? Where's it going? I'm looking at that big orange box. We know it's a truck and it's offset by that loan. But you can monitor your cash summary here. Did it increase or decrease? And then you're looking at your balance sheet to see if it has any trouble spots. And then with all these, going back to your reports to see in those specific areas what needs to be looked at or maybe improved upon to make your business healthy. Holy moly. So there was a lot there. Thank you so much for sticking around. In this video, we got our reports and figured out what lines to plug into the financials. We did some interpretation. We just defined some terms, brought about some different ways to think about all of this stuff. So again, thank you. Make use of this over and over and over. Please, if you have any questions, let me know. Thanks so much. Bye-bye.